Yeah, hello, welcome to another video. Today we want to take a look at the Russell iShare Russell 2000 ETF. Very popular ETF, obviously, and can also give us this one can also give us some hints about the S&P 500, the overall, the overall sentiment in the US stock market. Okay, we are tracking already the S&P, we're tracking the Nasdaq, but sometimes the IWM can give us additional hints or rather confirm maybe even just what we're tracking already. So the patterns are very similar to the S&P 500, for example, and the Nasdaq indices. However, there are some differences. Overall, bigger picture wise, here on the IWM, the idea is indeed, at least that's my idea, that a substantial top has already formed in 2021. Yes, we formed a marginally, really just marginally higher high in December 2024 when the price hit here this previous swing high from November 21, October, November 21. But we had a strong rejection. That's a strong indication that this was just a high B wave. It is also a three-wave move up. So the idea is that a larger degree third wave topped in 2021. We could be in a fourth wave, which has the potential to be quite massive. And we are now in the midst of this correction already, something that the S&P and the Nasdaq are probably only starting. So the formal high has likely already happened on the IWM. Okay, so I think now we can zoom in a little bit, take a look at the Elliott Wave structures here, and my idea is that we've topped there in this B wave. We had an initial decline in an A wave. That's a three-wave move. Whenever an A wave is a three-wave move, the B wave can be quite aggressive. It sometimes even overshoots. In a so-called flat correction, we had here an A wave, a B wave, and a C wave as an ending diagonal. 1, 2, 3, 4, 5. Yep, that is one valid interpretation here. And then we have completed this B wave up here around $244. And the C wave down has likely started. And at the moment, we zoom in a little bit and let's go to the daily time frame. So then, I would track this move down as wave C of A. Was probably a five-wave move, best I can tell. You can see that because this was 1, 2, 3, 4, 5. It's quite clear. Five-wave move. And we're now probably working on this B wave. So I think what we can do is we can remove this resistance area and we can add another one for this B wave. Now the thing is, if one B wave overshoots, then the next one, the larger degree, often doesn't overshoot. It could do it, but it's just not that common. So the idea would be that we are probably in a B wave, but we should rather add let's say the standard resistance levels for a B wave. And we can do that by measuring the length. We can do that by measuring the length here of the entire, just need to think, of the entire A wave down. We add resistance, and I would like to usually I would for a B wave add the 88.7 retracement, and this is the resistance area I'm tracking here. So let's shift it. And the idea is that we have only, look at the proportions here. Okay. So the idea is that this B wave could stretch quite a bit. So what could happen is that this is only the A wave rally. We will then get a B wave pullback and then could get a C wave rally. It might overshoot, we'll have to see. And then we can get a C wave decline. So it might stretch higher, might get close to previous highs from November 24 and November 21. That's at least, or December 24 and November 21. That is my current idea, about the IWM. That kind of does also explain why I'm leaning towards one more high on the S&P 500, because obviously the other scenario would be on the S&P 500, for example, on the SPX, I'm tracking also potential of another rally, maybe even to all-time highs. Yeah. Whereas you could say the alternative on the S&P is breaking down lower. I mean, I cannot rule that out here, but I think the structure here lends itself to this interpretation, a larger B wave. It's, in my view, even a bit clearer than on the S&P. But the question is now, like on many of these indices I'm tracking as well, the rally from the April low, is it done? Is it complete? So we can add some microstructure. So first of all, this here is seen as wave A. And A wave on many of these indices and also stocks I'm tracking this as a 3-wave move up. So A wave, B wave, C wave. Most A waves are 3-wave patterns. It's certainly not impulsive to the upside. It starts here with a 3-wave move up in circle wave A. We had a B wave pullback, and then what we can do now is just add some labeling here for this circle wave C to the upside. And I would actually see this as ending diagonal circle wave C. So I like the idea that this here could be the wave 1. We had a wave 2. Let me think, actually. Hold on. 2, 3. Just watching the subwaves here. I think this would be 3. This would be 4. We could now be in the 5th wave to the upside. So it might need that one more high. Is it technically needed? No, but it would look best with, I think, one more high. Let's zoom in a little bit. Here we can say, hold on. A, B, C in 1. So again, it shows you it's an ending diagonal. And so this would be 3rd. And then we can add here also A, B, C. Microstructures here aren't very clear due to that gap. 4th wave pullback. And yeah, the 5th wave should also be an A, B, C. Obviously, the smaller we go, in terms of microstructure and level of detail, the more fragile these patterns become. If we track support for this 4th wave, that happened. You can see that we've reached the 50% retracement. That's very, very common for a 4th wave. Could have even gone down a little bit lower, the 61.8 fib. So it held wave 4 support. I mean, it's not so helpful now anymore, but obviously it kind of confirms this wave count. What we can do now as well is define a broader target range for wave 5, or let's say rather for circle wave C. The way to do that is we take a length of circle wave A, we go to the low of circle wave B, and then we add the next fib levels. So here I'd say what kind of makes sense is the 161.8 extension. We can double check some other levels here, compare it with some other levels. $212 to $216 seems to make sense. Also, if this was wave A and B, we can calculate a standard micro target zone, which might overlap. That's typically the 100% extension. Yep. So yeah, you have here a zone between $212 and $217.50. The microstructures are very fragile. I just wanted to give you a broad outlook, and then obviously we can just try to help everybody understand how the microstructures could look like. But it also means that if we now get a break below $197.22, it would be a good indication that we have topped and started the B wave pullback. Yeah, which could then lead to a C wave rally if the pullback is corrective. Yeah, that's the update about the IWM. Hopefully that gives you a good idea of the levels for the next over the next sessions. I hope you liked the update. Thank you very much. Bye-bye.